get some corporate conversation going. Rajesh Aggarwal, MD Insecticides India, is joining us now to discuss the quarter gone by and, most importantly, the outlook going forward. Mr. Aggarwal, thank you so much for joining in. This time around, revenue growth has been weak again. It has come in at 8% versus quarter one growth of 5%, quarter two growth of 2%. You had guided for a 10% growth for FY26 overall. Considering that it has been high single digits so far, do you think you will meet that 10% guidance or do you have a revised guidance for us?
This is a difficult year. We thought that there were some recovery signs, so that will be possible. But overall, it looks that getting the recovery during this year is going to be very, very difficult. So despite of our best efforts, we could grow our sales only by 8% in this quarter. And overall, if we see, it is just the 5% growth what we have achieved in the 9 months. So I believe that achieving the 10% target in this fiscal is going to be very, very difficult. And this year will close somewhere around 5-6% growth only.
Okay, so Mr. Aggarwal, you're saying that at the end of FY26, you're toning down or moderating your top-line guidance from 10% to around 5%. Now, when you're talking about the premium product segment, earlier you had given a guidance of 20%. So what will that grow at, given the fact that you moderated your guidance, and how will margins look at the end of the year?
Yes, correctly pointed out that these premium products have also taken a hit. The growth, overall growth for the premium products will also remain somewhere around 10%. And the margins might also not improve too much because we are into a cyclic business where 60% business or 65% business happens in H1 and it is only remaining 35 to 40% which happens in H2. Though we'll try to make a recovery in the last quarter, but meeting out all the expenses and doing the things are looking little difficult in the volatile market. So that does not mean that the outlook overall is going to change for this year, 26. Yes, this quarter 4 is not a very huge recovery quarter, but we'll try to maintain the top line and we are working on the bottom line that how we can sell the premium products better and make some gain into this.
Okay. Mr. Aggarwal, when the entire sector was going through a lot of pressure, you were one of the companies that spoke about continuous growth. So I want to understand what is happening in this space right now. Are you facing pricing pressure? Is it demand pressure? Generally there's a lot of dumping happening from global markets. I want to understand what went wrong suddenly.
Overall, this year has not been a very good year for sales because demand pressure is very much there. And there had been seasonal impacts continuously during the cycle because in the beginning of the Kharif season, there were good rains and then there was a big drought spell. After that, there were big flood-like symptoms and even the Rabi season did not pick up. So overall, the industry this year is expected to decline by 2 to 3%. And in that scenario, we are going to grow by 5%. We have beaten the industry, but we are also beaten by our own targets. So that way, I'm not very happy. And particularly the margin side also has taken a hit, which is forcing us to rethink how we have to make up the thing, how we have to increase the ROC, how we have to reduce the expenses, how we have to see that where we are going wrong. So we are working out and I believe that from Q1 itself, we will find a change in our performance.
Okay, Mr. Aggarwal, two-part question. End of the year, where will you end EBITDA margins at? I just missed that number. And secondly, off a low base, FY27, what is the kind of initial estimates you can give, especially given the fact that weather conditions are expected to be a lot more supportive?
H1 had seen the EBITDA margin going to 35-36%. Difficult to maintain that. So there will be a little slide, but still the total EBITDA margin, what we are going to get is near double digit. That is something I can hope for the year as a whole.
Okay. Take that point, Mr. Aggarwal. Thank you so much for joining in and being honest about the outlook going forward. So they will not be able to meet the guidance that they had given earlier of 10%. Now they have cut it down to 5 to 6%. There is some demand pressure and it is expected to continue for a bit. The stock has come off from the high of the day, but of course it was already trading in the red. We'll slip into a short break. On the other side, we'll decode the impact of STT hike in the F&O segment on arbitrage funds. We'll have Bhavesh Jain of Edelweiss MF who will join in to explain the impact.